July non-farm payrolls are due out momentarily, and with us today we have Darrell Cronk. He's a regional CIO, Chief Investment Officer of Wells Fargo Private Bank. Darrell, it's great to have you in the studio.
Thank you, Joe. Good to be here.
We're going to jump in a moment to Dave Peltier. He, of course, is the Streets analyst out in the newsroom right now. But what are you looking at for today's jobs report?
So there's a lot of data points that I think tell an interesting story this month. I think it'll be one of the most scrutinized months overall. But I think when you look at the headline number, Joe, there's definitely an upward bias heading into this month. So we saw a strong ADP report on Wednesday. Jobless claims yesterday came in at a 5.5-year low. So I wouldn't be surprised at all to see a 2 in front of the number this morning here in a few minutes.
A 2, that would be a pretty good number in most people's eyes.
That would be. The consensus today is about 185, but after Wednesday and Thursday's data, it's definitely had an upward trend to it, or a bias. Some of the whisper numbers are even coming in as high as 220, which might be a little high, but okay. I think we could have a 200 number.
In general, we've seen some pretty good numbers the past few months. It's showing a trend of improvement in the labor market, but it's still not great. What do you think?
Yeah, I think the labor market, has been very consistent, right? I mean, you look at the last 3 months, we've seen 195, 195, 199. The 6-month average of jobs is 202, right? 202,000 a month. So that's pretty consistent. Unfortunately, it's not high enough to really drill into that unemployment rate and lower it materially. The lowering has really come through the labor force participation rate and the declines there.
And I was going to ask you about that. You've been watching the participation rate. Are there concerns there?
Yeah, I think so, because the reality when we talk about jobs is not all jobs are created equal. And so when we look at the last couple months, the composition of the jobs data, we've seen heavy gains from the leisure and hospitality sector and the retail sector.
Yeah.
Those have accounted for almost a third of the jobs. And the problem with that is those tend to be the jobs that, as you move into the seasonal summer months, they're the lowest paying jobs as well as the least hours worked jobs. So we'd like to see more of full-time jobs, not the increase we've seen in part-time jobs. I think that would show us that the jobs number overall was sinking with some of the other economic data and a healthier improvement in the economy.
Sure. We've been following labor market very intensely for a number of years. Right. A lot of people, I mean, we say, wow, 200,000 will be great, but what does the average Joe need to kind of pull away from these? Is there hope for jobs, up in the future? Or?
Yeah, I think, I just made the point about the hospitality, leisure sector and the retail sector, but if you get behind some of the other sectors, right, and look at more of what I call the core jobs, obviously construction gains have been nice given the resurgence in the housing market. Residential housing has been white hot lately, as we know. But maybe even more importantly, yesterday, we saw the ISM number, right? Off the charts at 55. That's extremely strong, better than most people expected, which would suggest, I think, in the back half of the year, we'll see some pickup in manufacturing jobs. So overall, I think the economy is trending much stronger heading into the second half. Matter of fact, a 55 ISM number is consistent with 3% GDP growth in the second half, Joe.
Darrell, we're going to jump over to Dave. Dave, do we have the numbers in?
Yeah, they just hit, Joe. Thank you. The non-farm payrolls came in at 162,000, definitely short of the consensus here of 185, and I was hearing whispers up around 200. Also had a revision lower than the last month, down to 188 from 195. Most of these jobs were in the private sector, 161,000. The unemployment rate ticked lower to 7.4.
Oh, wow.
And the underemployment rate, which a lot of folks look at, was at 14. Down from 14.3. I can see if we can get a few more revisions here, but definitely the last month was ticked lower to 188.
Great, Dave. Great, Dave. Thanks so much. We're going to look at the top numbers first. Darrell, 162. What's your immediate reaction?
Yeah, that's lower, obviously, than we were just talking about. And in particular, the revision lower last month as well, which we've been seeing, all the revisions in prior months have been trending to the upside. So that definitely probably gives us a pause. Nice tick down in the unemployment rate from 7.6 to 7.4. My guess is, though, Dave didn't give it to us, but that's plugged into the participation rate.
Okay.
Right?
Yeah, absolutely. The U6, he said, ticked down to 14 from 14.3. I think a couple months ago we were actually below 14. Following that U6 number, it seems to be very volatile.
Yeah, it does, and I don't know that I take a lot of reading off of that per se. I need, I'd really like to see what the average hourly earnings worked look like, as well as that labor force participation rate. And I think the work week makes sense too. There's a push-pull in the work week of all those part-time jobs competing with the full-time jobs, in the sense that we've seen such gains in productivity in corporate America that's extending the average work week for the average worker, but the reality is all those part-time jobs are pulling on the work week from the other direction. So which one of those two forces wins out? I actually think the full-time side will win out as we move past the seasonal numbers. But certainly, to your point, the headline number, I'm not sure the street in Wall Street will take away great news on the back of some good news yesterday from this.
Interesting.
Yeah.
Dave, we're going to throw back to you. What are you seeing in the futures market right now?
Seeing the futures coming back a little bit. We were pretty much flat before. Really, the NASDAQ's kind of dominating things. The NASDAQ's up the most. The S&P's flat-ish, and the Dow's down about 9. One thing to note is that gold was down heavy going into this, and they've paired some of their declines.
All right. Well, Darrell, we have watched investors, the last non-farm payrolls report, stocks ended up going lower and then moving higher during the day, as it seemed like traders were trying to figure out what exactly the jobs number meant for today's. With this miss, I mean, it's not a huge miss, but it's a miss. Should people focus on how the market moves and use that as some sort of barometer?
Yeah, I don't think so, because what the market will be really looking for here is to digest, is good news, or is bad news good news, right? This whole idea that if the data is just soft enough that it keeps the Fed on the sidelines, keeps them from tapering certainly into September, or even prolongs it longer. I don't think a 162 number, I think it's in that 150 to 200 number range, which is right in the heart that the Fed's looking, when they talk data dependency about tapering, at a longer term trend of consistent data. And the reality is, Joe, if you look at consumer confidence numbers, you look at housing numbers, housing starts, business numbers, ISM numbers, the earnings numbers, across the board, certainly that economic data is improving. And I think that's where the Fed will focus its energy, and not just on a 162 print with potential for revisions next month.
As you know, Darrell, we're very used to much bigger misses in the monthly jobs report the past 5 years, so 162 maybe not too terrible. But final question is, looking at the market for today, what do you expect out of this?
I would expect the market to be pretty benign today. Okay. And we saw a nice, healthy rally on that good data yesterday, and I think when we think about where the market's at today, we've run a long ways, right? We crossed the 1700 barrier, psychological barrier yesterday. The market is no longer cheap. It's kind of fairly valued. It's certainly not expensive. But I would expect today we'll get kind of a flattish market, maybe a trend up a little bit, as some will read into this number, that this is a soft enough reading that, again, puts the Fed at bay for a while. I'm not sure that's the case, but that's probably how the market will see it today.
All right, Darrell. Well, thanks so much.
My pleasure. Thanks, Joe.
That's Darrell Cronk. He is Regional CIO of Wells Fargo Private Bank. We liked having him in today, and we'd also like to thank Dave Peltier for his work out in the newsroom. For The Street, I'm Joe Deaux.